Hi, welcome to my channel where we tell stories of hope, transformation, and growth. That's my jam. That's what I'm excited about. I love it. I love those kind of stories. I feel like they bring hope to everybody, and every time I tell one, it reminds me that we are loved and there is a divine being greater than us that is caring for us and intimately involved in our lives. But today I want to talk to you about something else. This is something else I'm really passionate about. We as a family, so my family, my kids are all grown now. I have 5 kids. And one of the things that we have really prioritized as a family is establishing life insurance policies for our minor, so I'm talking about under the age of 14 children. If this sounds, a little bit weird or distasteful to you or morbid, I can almost guarantee that you are thinking about term life insurance. You might have seen, like the Gerber life insurance product ads or some other, ads on TV, and you're probably thinking of something that is a very simple plan. It provides a death benefit to the policyholder if the child passes away. And usually it is for the purpose of, covering any kind of final expenses or, funeral plans and that sort of thing. Obviously, if a child dies, it is typically very unexpected. It may be expensive because there is potentially an accident or an illness at play in that type of situation. But the type of life insurance policy that I am talking about and that we have prioritized for our family members is a whole life policy, and it works completely different than a term policy. You can think of it as part death benefit and part cash accumulation system. And the reason we love it and that we're so excited about it is because, first and foremost, I don't know if you know this, but children are pretty much guaranteed to be insurable. They don't have to go through any kind of a medical examination under the age of, for most insurance carriers, it's 14. Some can go a little bit higher, where they maybe 16 or 17, where they don't have to, they're automatically, classified as non-smokers, obviously, and they get the, best standard rates as children. So they are also guaranteed insurability. So that is a beautiful thing. I think all of us may know people in their 20s or 30s that at some point have acquired a condition or disease, and now they become uninsurable. If you have taken the time and made it a priority to establish a plan for a minor child, typically you can do it as early as 14 days old, and you're paying into that policy for however number of years. It can be built a lot of different ways. It can be built where you're paying into it your whole life, or it can be built where you are funding it for a certain number of years, and after that, the policy is self-sustaining. So, all of that to say that these policies for minor children can just do so much. Not only provide a death benefit. Obviously, that's important. If a child passes away, the family is typically left with a bundle of expenses because it would be an unexpected tragic event. But in addition to that, the child, even for a low dollar amount, they can fund that policy where, you know, part of it goes to the death benefit, but the other part of it goes to, think of it as kind of an interest accruing savings plan. And they can then use the funds in that policy to fund college. It does not need to be declared on FAFSA if they have that kind of money available to them. They could use it, we've seen people use it for their first car purchase, for their down payment on their home. The, you know, magical thing about it is that this money, rather than being taken out, can be taken out of the policy or borrowed from the policy, meaning the total value of the policy never goes down. It continues to accrue interest on the total value of the policy, but you're taking a loan against the policy, and that loan is not credit score dependent. It, to be honest, would not have to be paid back. We think it's a good idea to pay it back so that you can continue to fund the policy and you don't decrease the death benefit in any way. But that policy can last for a child's whole life. If when the child becomes a teenager, maybe they get their first job, you as the parent can teach them about their policy, and they can begin to put part of their income into the policy as well, so that they understand it. And at some point in adulthood, you can, if you want to, transfer that policy to them where they can continue to fund it. You literally can make your child a millionaire, and it can be faster and easier than you might think it would be. So anyway, I have just barely kind of scratched the surface of all the ways that these policies can be built, all the things that they can do for you, all the flexibility that's in there. I truly believe that if you can change a child's life, you really can change the world. And wouldn't it be amazing to see so many more of our kids graduate high school? And we know how hard, you know, that we struggled when you went through college and you were buying your first home and you were buying cars and you were kind of, you know, getting into that adult world. Or what if they had some funding that was like that extra wind beneath their wings? It was kind of gave them a boost into adulthood. And this is one way in which this type of policy can be used. So if this is something that is intriguing to you and you want to figure out, you know, how you can give your child this kind of boost, along with, you know, making sure that there is a death benefit in case of some kind of unforeseen accident, I would love to chat with you. I am so passionate about this and so excited to see people, you know, be able to give their child some wings once they get into adulthood. So thanks for being here. I love you. Let's talk soon. You can send me a message here, or you can find me on my socials. Thanks. Have a great day. I love you.